Welcome back, champions. Another mind-boggling stock news. In this video, we will know about the top 5 mutual funds to choose for investing in 2024. Number 1. Vanguard Total Stock Market Index Fund, VTSAX. Assets, $340 billion. Fee structure, 0.04% or $4 per year on every $10,000 invested. Minimum investment, $3,000. The Vanguard Total Stock Market Mutual Fund is one of the largest mutual funds on Wall Street. It's also deceptively simple, doing exactly what it sounds like it should by offering exposure to the totality of the U.S. stock market. There are nearly 4,000 different stocks that make up this product, representing all sectors of the domestic marketplace and all sizes of companies. Of course, not all those investments are represented equally, with about 31% of total assets in the tech sector. The fund is also weighted towards larger companies, so trillion-dollar tech giants Apple Incorporated, APL, and Microsoft Corporation, MSFD, make up significantly more of the fund's portfolio than smaller startups. But if you want a bit of all that Wall Street has to offer, this mammoth mutual fund is a great place to start, particularly considering its rock-bottom fees that undercut even some of the cheapest ETFs out there. Number 2. Vanguard 500 Index Fund Admiral Shares, VFIAX. Assets, $457 billion. Fee structure, 0.04%. Minimum investment, $3,000. A bit more focused, this S&P 500 index fund from Vanguard is another runaway leader that's worth considering. It's tied only to the S&P 500 index of the 500 largest U.S. stocks, so instead of the totality of the market like the prior fund, you only get the big dogs. Like all Vanguard index funds, it's incredibly affordable with a low investment minimum and modest annual fees. So for those who simply want to set it and forget it, by relying on the success of big corporations like tech leader Apple, megabank J.P. Morgan Chase & Company, JPM, and drug maker Eli Lilly and Company, LLY. This is a logical mutual fund to buy now. It is also biased towards tech, but a bit less so than the prior fund, with about 28% allocated to this sector at present. Number 3. American Funds Growth Fund of America, AGTHX. Assets, $252 billion. Fee structure, 0.63%. Minimum investment, $250. Unlike index funds that remain very constant in their philosophy and list of holdings, this fund takes a flexible approach to growth, investing by actively seeking opportunities that its 13 managers think offer the best upside. You'll pay a bit more in fees, and there's obviously risk to this approach, but with a 10-year average return of about 11.6%, there are many investors who are interested in this slightly more aggressive fund. Top holdings at present including Microsoft and Facebook parent Meta Platforms Incorporated, Meta, but interestingly, it is actually less reliant on tech than the prior funds with only about 26% of assets in the sector right now. Number 4. Fidelity Select Technology Portfolio, FSPTX. Assets, $13 billion. Fee structure, 0.7%. Minimum investment, none. Fidelity Fund offers a reminder that you can indeed get highly tactical options in a traditional mutual fund package. As you no doubt could guess, FSPTX is dedicated to tech stocks with a very targeted list of only about 50 picks. The managers are incredibly selective and offer an active approach to the sector that comes with some additional fees, but seems to resonate with many investors. The fund is incredibly top-heavy though, with 19% of assets in Microsoft and another 15% in Apple. Considering the regular outperformance of these stocks, however, that's an approach that may be an attractive feature to some tech investors rather than a reason to steer clear. Just make sure you're okay with focused bets like that going forward if you invest in this Fidelity Fund. Number 5. J.P. Morgan Equity Premium Income Fund, JEPAX. Assets, $6 billion. Fee structure, 0.85%. Minimum investment, $1,000. Though one of the priciest mutual funds on this list, the big-time yield of JEPAX may make it worth a look for investors trying to access high-yield dividend stocks. The collective payout of this fund's roughly 115 stocks is good for a tremendous 7.9% yield that puts even the bond markets to shame and gives you continued exposure to equity markets if you want a portfolio that still throws off a lot of income but allows you to tap into the upside of stocks. It does so through investing in both conventional dividend payers as well as derivatives such as call options that can generate income from stocks without traditional dividends. There's clearly risk, as these aren't your typical blue-chip stocks in this portfolio, but it's an interesting option for yield-hungry investors. Did you find the information useful? Let us know in the comments.